So, if you've been trying to make sense of the crypto market lately, you're probably scratching your head, right? I mean, the headlines are all screaming about these huge bullish trends, but then you look at the charts and everything's bleeding red. It feels like we're living in two totally different realities. So what on earth is actually going on? Let's get into it and figure this out.
I mean, on one side, you have these massive banks and billionaires talking about tokenization being a megatrend. And then on the other side, it's just a sea of red. Your portfolio is probably not looking too happy. It's a total paradox.
And the disconnect is it's wild. The headlines are all about institutions finally showing up, billionaires buying in, and even favorable regulation on the horizon. But the reality on the ground? Prices are falling. And investor sentiment is, well, it's in the basement. It's a genuine mystery. And to solve it, we need to look at three key clues. Let's start with the biggest one.
Okay, so our first clue actually has almost nothing to do with crypto itself. It's all about these huge, powerful economic forces that are shaking up every single market out there, from stocks to gold. And it all begins with the U.S. Federal Reserve.
You see, the Fed is stuck between a rock and a hard place. Their job is to keep inflation low and keep employment high. But right now, those two goals are in direct conflict. To fight inflation, they got to keep interest rates high, but to protect jobs, they need to cut them. They can't do both, and that internal struggle is creating absolute chaos for investors.
Here's where it gets interesting. Just a month ago, it wasn't even a question. The market was absolutely positive that a rate cut was coming in December. It was basically a done deal, and everyone had already priced that good news into assets like Bitcoin. 99%. You heard that right. The market was almost unanimous. Now, you almost never see that level of certainty about anything, and it was setting the stage for a massive shock to the system.
And today, poof, gone. That certainty has completely evaporated. The probability has crashed to under 40%. You just don't see swings like that. It has injected a massive dose of fear and uncertainty into the market. And when that happens, investors run for the hills, away from anything they see as risky.
And this is the smoking gun. The Fed itself is admitting they're divided. Their own official notes use language the analysts called extremely rare, basically showing that they're all arguing internally about what to do next. And look, when the people steering the economic ship look lost, you can bet investors are going to get nervous.
And if that wasn't enough, there's this other thing. For years, there was basically a free money loophole in Japan that was fueling markets all over the world. Investors could borrow money for practically zero interest there and pour it into U.S. assets. Well, that loophole is closing fast, and it's sucking billions and billions of dollars of liquidity right out of the system.
All right, now for our second clue. For a whole other group of investors, the answers aren't hidden in some boring Fed minutes. They're right there in the charts. These are the people who believe history doesn't just rhyme, it repeats, almost exactly.
So why do we start with Bitcoin's chart? Well, because it's kind of like the canary in the coal mine for everything else. Think about it. The crypto market never closes. It's open 24/7, so it's always the first to react when sentiment changes, making it a pretty good leading indicator for where the rest of the market might be headed.
Now, one of the biggest signals these chart watchers look at is something called the 50-week moving average. It's just a simple trend line, but for technical traders, it's a huge deal. As long as the price stays above that line, the bull market is alive and well. But the moment it breaks below it, like it did recently, well, that's when the alarm bells start ringing. It triggers all kinds of automated selling and tells a lot of people the party's over.
And this is where it gets a little spooky. The predictability of these cycles is pretty striking. Historically, bull markets have lasted about 10-50 days, and the bear markets that follow, almost exactly 1 year, 364 days. Well, guess what? Our last bull run just hit that 10-50-day mark. So, if history is our guide here, we've just started a year-long downturn.
So we have macro fears, and we have these technical signals from the charts. But our third clue is maybe the most fascinating one. This isn't about outside forces at all. This is about a huge power shift that's happening right now inside the world of crypto.
First, you've got the OGs, the original crypto believers. Here you see Robert Kiyosaki saying he sold millions in Bitcoin that he bought for just $6,000 a coin to buy real-world businesses. He's cashing in his chips and taking his massive crypto profits off the table. But here's the thing. For every seller, there has to be a buyer. And the buyers are a totally new breed of investor. Right after that, you have billionaire Grant Cardone saying he'd take $1 billion in Bitcoin over real estate without even thinking about it.
What we're watching is a direct handoff, a transfer of wealth from one generation of investors to the next.
And this leads to this really compelling theory that Bitcoin is having its IPO moment. You know, like when a private company goes public and the early investors can finally cash out? The idea is that the market is finally big enough, liquid enough, for the original Bitcoin whales to sell their huge positions to new institutions without completely tanking the price. So what looks like a scary sell-off could actually be the market maturing.
And there's even another layer to this internal drama. It's like a philosophical civil war is breaking out. A lot of the original Bitcoiners believe the blockchain should be kept pure, used only for money, period. But this newer school of thought sees it as a protocol for transferring all kinds of data. This deep, fundamental disagreement is actually causing some longtime holders to sell out of principle alone.
Okay, so we've got our three clues. Huge macro fears, flashing red signals on the charts, and this great wealth transfer happening internally. Let's put all the pieces together and see what this tells us about what's coming next.
The big reveal is that there isn't one single culprit here. It's a perfect storm. You have this external pressure cooker from the Fed, you have chart-based selling from traders who follow these signals religiously, and you have this internal changing of the guard from old money to new money, all hitting at the exact same time.
So what you see when you look at the market right now really depends on your time frame. It's like two completely different stories are unfolding at the same time.
If you're a short-term investor, you look at all this and you just see risk. You see volatility, a market shakeout, a reason to get out. But if you're a long-term investor, like some of the sovereign wealth funds and university endowments that are reportedly buying right now, you see something else entirely. You see a foundational shift and maybe a historic buying opportunity. So I guess that's the final question we're all left with. Are we just weathering a temporary storm that's going to pass? Or are we in the middle of a permanent, fundamental changing of the guard in this market? The answer to that question is going to define the next decade for this entire asset class.